So friends, now I am here with a new topic called as time of supply, and it is very relevant topic. Friends, for a layman, time of supply means when the goods are handed over, when the services are provided, that is the time of supply. But for the purpose of GST, this carries altogether different meaning. Time of supply for the purpose of GST means two things. Number one, when tax becomes payable. When the tax should be paid. Reason being because there are multiple events in one single supply. Now just if you see the sequence, there is a contract. Under the contract there is a supply. Then there is invoicing. Then there is payment. These are only events. This is not a fixed sequence. In a situation, it may happen that advance payment is made, then invoice is issued, only then the supply is made. Generally, this is what the sequence is, but it can vary. But at what point of time tax becomes payable, that is called a time of supply. Another thing is that on every event, in a hypothetical situation, rate of tax may vary. Right? Assume that when the contract is made, rate of tax applicable is 12%. When the supply is actually made, the rate becomes 15%. When the invoice is raised, it is again 15%. But when the payment is received, it is reduced to 12%. Now, at what rate the tax should actually be paid? So, the rate of tax, this is also decided on the basis of time of supply. So, two important questions we are going to answer in this chapter: when the tax should be paid and at what rate the tax should be paid. Right? So that's why don't go on the simple understanding of the title, time of supply. It's not that. For the purpose of GST, time of supply means when the tax becomes payable and at what rate the tax is payable. These two questions we are going to answer here. Right? And for the purpose of this chapter, we are going to touch upon CGST Act, and here we are covering section 12, section 13, section 14, section 31. Section 12 talks about time of supply for goods. Section 13, this is time of supply for services. Section 14, this is about the change in rate of tax. Change in rate of tax. Right? Just before coming to this title, I told you that there can be difference in the rate of tax at different time of different events. At what rate the tax should actually be payable, that we are going to cover in section 14. Section 13, this is regarding invoice. Invoice and certain other documents, at what time those are required to be issued. And then these are also to be read with CGST rules. In these rules, we'll talk about rule number 46, 47, 48. 46, 47 and 48. These many rules are also covered for covering up this topic, time of supply. So as usual, in this chapter also few definitions are relevant, and most of the definitions which are relevant we have already done before. What is the meaning of the goods? We already know what is the meaning of the goods. What is the meaning of services? What is the meaning of invoice? Who is the recipient? These are few definitions which are given in the chapter which we already know. But two definitions are important to understand which are specific for this chapter. And that is, one is under section 2 subsection 32. Section 2 subsection 32, and this is called continuous supply of goods. What is the meaning of continuous supply of goods? So friends, the first requirement for continuous supply of goods, there is a contract. This is a single contract, and under this contract there is either continuous or recurring supply. And the mode of supply may be mode of supply includes cable, wire, pipeline, and then payment is also periodic or time based. If these features are met, it will be referred as continuous supply of goods. So this says it is a single contract, and in that contract itself there is a supply of goods either continuous or recurring, and the mode of supply includes, it doesn't say mode of supply means, so this says mode of supply includes supply through wire, supply through cable, supply through pipeline, and the payment is periodic or it is time based. So this is referred as continuous supply of goods, right? The next definition is continuous supply of services. So that is under section 2 subsection 33. So continuous supply of services. So section 2 subsection 33. This is continuous supply of service. Continuous supply of service. So this I can divide it in two parts. First part says, which is similar to in relation to goods, there is a contract and services are supplied continuously or periodically, and for that payment is recurring, and other side this is any other service notified by central government. But now the most important part, a contract of service in which services are supplied continuously or periodically, payment is recurring, and duration is more than 3 months, right? So when these three things are there but the period is less than 3 months, it is not a continuous service unless that service comes under this category, because this 3 months period is not relevant for this part, because this is saying any other service notified by the government. So even if the period is not 3 months, it is less than 3 months, but it is notified, it will continue to be called as a continuous supply of service. Right. So these two definitions, I thought these are relevant particularly for this chapter. So these are section 2 subsection 32 and then section 2 subsection 33. Okay. Now I told you which are the provisions we are going to talk about. Section 12, section 13 and section 14, those are main things. But even before talking about those sections, the most important one is section 31. So right now we are talking about section 31. If you see the title of this section, this says tax invoice. But this is not about the tax invoice only. This section talks about many more things. And in this section, we can divide this in two parts. That is, in relation to goods and in relation to services. In relation to goods, three provisions are there, that is subsection 1, subsection 4 and subsection 7. Right? And for goods, for services, we have subsection 2, subsection 5 and subsection 6. So in total there are 7 subsections. 1, 4, 7 is covered here. 2, 5, 7 is here. So 1, 2, 4, 5. 6, 7. What is missing? That is subsection 3. So here we will have subsection 3, which is common in either case for goods as well as services both. Okay, so this is just a structure of section 31, and now we will take up in relation to the goods, that is subsection 1, 4 and 7. So time of issuing invoice in relation to goods. Issue of invoice, and this is in relation to goods, right? This we will divide in 3 parts. Subsection 1, subsection 4 and subsection 7. Subsection with this is for general provision. Subsection 4, this is for continuous supply, and this is the reason I explained you what is the meaning of continuous supply. Subsection 7, this says goods sent on approval or return basis. Goods sent on approval or return basis. In general, when the invoice should be raised. So now the question is whether the movement of goods is involved or the movement of goods is not involved. So that concept you have already understood earlier. Whether movement of goods is involved or movement of goods is not involved. Right? So movement of goods is not involved means goods are lying at one particular place, goods continue to be there only, but the title is transferred, supply is made. So whether the movement is involved or movement is not involved, that will make the distinction for the purpose of subsection 1. So this again I can divide it in 2 parts. This is movement is there and no movement is there, right? So whether goods are required to be removed or goods are not required to be moved. So in this case, before or at the time of removal. Before or at the time of removal. But this is subject to a proviso Central government may prescribe another time for certain goods. Right? Now friends, the question of the tax invoice is relevant only if supplier is already a registered person. When he is registered, only then provisions are applicable. So if you read subsection 1, this begins with a registered person. Right? So that starts with a registered person. Reason being because provisions are attracted only when the person is already registered, otherwise provisions are not applicable. So registered person making a supply of goods, and if the movement is involved, he is required to issue an invoice at the time of removal of the goods, either at the time or before, but in certain cases government may prescribe another time limit, and one exception of this is already here. Right. So when we read subsection 7, it begins with notwithstanding anything contained in subsection 1, because this is talk about the time of issuing the invoice here. So in subsection 7, that will have overriding effect over subsection 1. So if the goods are being removed on approval or return basis, then subsection 7 is applicable, and if it is a supply in general, then subsection 1 is applicable. Right. So these are contradictory, but the fact is subsection 7 is having overriding effect. Okay, so there is no question of contradiction in the prima facie reading. You may find that these are contradictory, but when you read first line of subsection 7 carefully, that says notwithstanding anything contained in subsection 1. So that means none of these are applicable, that will have overriding effect. And if the movement of the goods is not involved, so it means the goods will continue to be at the same place where those are lying even before the supply is made. But the supply is done. It means the title is transferred. In that situation, this is before or at the time of supply. Right? Now, here we are using the word supply, and here we are using the word removal. So this will help you to get a clarity when the invoice is required to be raised, if the movement is there or movement is not there. In this case, it is a case of removal. Right. So this is the time of supply itself. Right. The time of supply of goods. So title is being transferred here itself. Right. And in this case, the goods are lying, there is no movement of goods is involved. So time of supply means when the title is transferred, at that time there has to be an invoice. So this is a general provision regarding issue of invoice in relation to goods. Then we come to subsection 7. This is talking about goods sent on approval or return basis. So in this case, invoice at the time of supply or within 6 months since removal of goods, and out of the two also whichever comes earlier. So when the invoice is to be made when the goods are removed for approval basis, the invoice is required to be issued at the time of supply or within 6 months from the time of removal of the goods. So when we say at the time of supply, it means the goods are sent on approval basis and the goods have been approved immediately, contract is concluded, invoice has to be raised at that time. So until the goods are approved by the buyer, there is no supply. Right. So the supply word has to be understood correctly. This is not the handing over the possession. This is the transfer of title. Right. So invoice at the time of supply. So this word supply carries a different meaning as per the definition of the word supply given in the section 7. That is the meaning supply. Right. So when the goods are sent on approval basis, certainly the possession is being given, but we are not talking about the possession at the time of giving the possession to somebody else. No. Position is given when the goods are sent on approval basis, but when those have been approved, at that time it will be called as supply. So either at the time of approval, and if it is not there, then within 6 months that should be then, otherwise goods must be brought back, right? So but this is having overriding effect over subsection 1. So here I can write overriding effect over subsection 1. Okay, because in subsection 1 when we said at the time of removal, right, and there we are saying at the time of supply. Huge difference, right? So in the case when the goods are sent on approval basis, the goods are removed, but there is no supply. So invoice has to be made at the time of supply or within 6 months. In this case, the supply is there, but the removal is either at that time or maybe before or after, right? Now we come to continuous supply of goods under subsection 4. Now when the continuous supply of goods is there in the contract, there must be some period after which the statement of accounts will be submitted by the supplier to the recipient. Or if it is not there, the payment is received by the supplier from the recipient. So either of the two. So this says either issue of statement of account by supplier or receiving payment, and out of the two also whichever is earlier. So at that time the invoice should be raised. So now let us have a look at the whole scenario. Here we can put again in the beginning section 31. The time for issue of invoice in relation to goods. Subsection 1, when the goods are supplied generally, the invoice should be raised at the time of removal or before that. If no movement of goods is involved, the invoice should be issued at the time of supply. If the goods are sent on approval or return basis, the invoice has to be made at the time of supply or within 6 months from the date of removal, whichever comes earlier. And if goods are being sent on approval or return basis, then these provisions are not attracted. And if there is a continuous supply, so I have already defined in the beginning section 2 subsection 32 what is the meaning of continuous supply of goods. So in that case, the invoice has to be made periodically, either on issue of a statement of account or receiving of payment by the supplier, and out of the two whichever comes earlier. So this is the time for issue of invoice in relation to goods. Okay, now we move to issue of invoice in relation to services, and there we are going to cover up subsection 2, subsection 5 and subsection 6. So now we put the title services, right? Now for this also we have 3 specific provisions. This is subsection 2, this is 5 and this is 6. This is, you can say generally, this is continuous supply, and here we have cessation, that there is a continuous supply of service and suddenly those cease, then what happens, right? So in case of supply of services, when the invoice is to be raised, this says central government may prescribe where invoice is required. In other words, where invoice is not required, right? So rather than giving the list of the cases where the invoice is required, it is the other way around, where invoice is not required, or any other document in place of invoice, that is also acceptable. So that is left to the government, that when the invoice is to be, where the invoice is required, where the invoice is not required, and where some document other than invoice will also be acceptable as an invoice, that is to be prescribed by the government. And now it further says, invoice is to be issued before or after service, but within prescribed time. So first of all, where the invoice is required, where invoice is not required, that will be prescribed by the government. Number two, any other document in place of invoice is also acceptable, that is also going to be prescribed by the government. And then comes invoice is to be issued either before or after the provision of service, but within the prescribed time. Now this prescribed time, for this we will go to rule number 47. Rule number 47. So once we have completed this chart, then I will come to rule number 47. You can continue here itself, but I'll need the space, so I'll need to clear this, right? So this is subsection 2, when the invoice is required to be issued. The first thing is whether invoice is required or not, that is to be prescribed by government. Number 2, any other document in place of invoice is also acceptable, that will also be prescribed by the government. And if invoice is required, within how much time it has to be issued, that should also be within the prescribed time, and that is governed by rule number 47. Now, in case of continuous supply, so a service is said to be a continuous supply if the period is more than 3 months and it is under a single contract and there is a recurring or a regular supply, or it is a service prescribed by government. So subsection 5 says whether the due date is ascertainable. Due date is ascertainable. So from the contract itself you can define when the date is due, right? So if you have a phone connection, mobile connection, the due date of the bill is there. You have credit card, the due date is always there, right? So for all the things which are continuous supply, due date is there. So if the due date is ascertainable, then before or on due date. So invoice shall be raised either before or on due date. Number 2, if no due date, then on receiving payment, as and when payment is received, at that time the invoice shall be raised. And if it is event based, on a happening of certain event. So in case of construction, the event can be decided that on every slab this much percentage of the payment will be released. So as and when the slab is laid, this payment becomes due because the event is there. So as and when the event takes place, the payment becomes due, and that is the time for issue of invoice. So on a happening of event, the invoice shall be raised, right? So subsection 5 says if it is a case of continuous supply of service, if the date of payment is ascertainable from the contract, then the invoice shall be raised either before or on due date. If due date is not ascertainable from the contract, then invoice shall be raised on receiving the payment. And if payment is event based, then on happening of the event, the invoice shall be raised. Right? Now, if for some reason the supply of services ceases before completion, in that situation, invoice shall be raised immediately on cessation of supply and containing the description of the services already supplied up to that point of time. So no date, on the date of cessation itself, invoice shall be raised. So there is services cease before completion. In that case, issue invoice on cessation, and this is containing services already supplied before cessation. So friend, this is nutshell of the time for issue of invoice as far as services are concerned. Subsection 2, 5 and 6. 2 is for regular supplies, this is for continuous supplies, and that is a cessation. In this case, we have already talked about continuous supply. So the date of the payment is ascertainable or it is not ascertainable, or the payment is event based. And if there is a continuous supply, if the service is ceased, then what happens? Right? Here I told you that rule number 47 is applicable. So you continue there itself. Right? So you need not refer any other page. On the same page you can see everything. So here, rule number 47. So for rule number 47, this is talking about the time of issue of invoice. This is banks, NBFC, financial institution mainly, and others, including insurance is also there. So for them, the time limit of issue of invoice is 45 days from the date of service or payment, whichever comes earlier. And for others, the time limit given is 30 days. Within 30 days from date of provision of service or receiving the payment, the invoice shall be raised. But here it says, services to distinct persons. Services to distinct persons as per section 25. So it means the same person is having establishment in different states or within the same state different verticals of business, then every person is considered as a distinct person. So same person is a supplier to all of them. In that situation, invoice on supply being recorded in books of account of supplier or end of quarter or end of quarter. So this becomes relevant when there is a continuous supply, and these services are generally considered as continuous supply of services. So services, if these are given to the distinct persons and the distinct persons are within the meaning of section 25, then the invoice has to be raised when the supply is recorded in the books of account of the supplier or end of quarter during which the services are supplied. So this is nutshell of rule number 47 when the invoice is to be raised. So generally the invoice is to be raised within 30 days of the provision of service or receiving the payment, whichever comes earlier, but in case of bank, NBFCs, financial institutions and insurance, within 45 days. And there also, if the services are provided to the distinct person, then when those services are recorded in the books of account or then end of quarter, whichever comes earlier. So this is the time for issue of invoice specifically. So till now we have talked about subsection 1, subsection 2, subsection 4, subsection 5 and subsection 7, right? Subsection 3 is for different situations, and that is also talking about documents other than invoice. So entire that thing I am going to cover up in the next video. So till then, first of all, revise all this what we have talked about in this video, then only you come to the next one. Till then, have a good time.